Hey guys, hope you are good and well. In this video, we are breaking down one of the most powerful moves in global finance when the Fed Reserve cut interest rates. When we say the Fed cut interest rate, it means the Federal Reserve has lowered the Fed funds rate. The interest rate banks charge each other for overnight loans. In simple words, when the Fed cut rates, it becomes cheaper to borrow money, which usually helps boost spending and investment. For example, a cut from 4.25% to 4% means business and consumers can now get loans of slightly lower interest, fueling growth across multiple sectors. And the most of these sectors and banking sector, cheaper loans means more borrowing but lower profit margins. And the real estate's mortgage rate drops, housing demand rises after the Fed cut interest rates. Adjustable rate mortgages may be an underappreciated opportunity. Top advisors and more buyers are turning to adjustable rate mortgages, which offer lower initial rates than fixed rate loans. Some ARMs could shave almost a percentage point of the 30 years fixed rate. Recent data shows for those who meet the criteria, arms may be underappreciated according to an advisor on CNBC. Financial advisor 100 for 25, but there are some risks for home buyers to consider, and stocks may be growth sectors like tech and finance often rally as the Fed reduced rate from 6.5% to 1% over 24 months. Gold prices gained 26%, providing portfolio protection, while equity markets declined substantially. Similar patterns emerged during the 2007 to 2008 financial crisis when gold appreciated 39% as rates fell from 5.25% to 0.25%. And this, a weaker US dollar, make gold prices surge in the sector, and Fed rates cut drive gold prices surge in 2025. The relationship between Federal Reserve rate cuts and gold prices represent one of the most closely watched dynamics in the financial market. When the Fed adjusts its benchmark interest rate, precious metals investors typically respond with heightened attention, as these policies shifts can dramatically alter gold investment appeals across global markets. And also the Fed interest rates as the forex in forex the USD often falls against other major currencies, and high interest rates attract investors who buy the country currency and increase its value. On the other hand, low interest rates chase investors who dump the country currency, decreasing its value. And the impact of interest rate on exchange rate is very important to understand, because the changing interest rate is critical to a central bank monetary policy and measures. Imagine it is a central control knob that enables central bank to regulate a range of factors such as borrowing patterns, economic growth, and inflation. Actually, economic growth slows down and inflation is under control, unemployment rises. In short, it's a signal that the Fed wants to stimulate the economy and prevent a potential recession. At the latest FOMC meeting, the Fed announced a 25 basis point rate cut, bringing the target range to 3.75 to 4%. However, the chair Jerome Powell made it clear that further cut rates are not granted, which means the Fed is staying cautious. And when rates fall, the dollar weakness and gold shines, stock market rises, borrowing costs drop, and corporate earning improve. Cryptocurrencies like BTC often rally as investors seeking higher returns outside traditional assets. So if the Fed cut again or inflation remains stable, expect gold to target double four double zero dollars and Bitcoin to remain strong above 110K dollars and US stocks to push towards new highs. But if inflation surprises or power returns turns hawkish, we could see short-term pullbacks. Otherwise, the Fed remains the heartbeats of global markets. So stay alert, trade smart, and always think ahead. Very thanks.